So what are uncollectible receivables? Well, uncollectible receivables refers to a portion of accounts receivable of which a company expects customers not to be able to pay. This situation can occur as a result of factors including a debtor's bankruptcy, an inability to find the debtor, fraud on the part of the debtor, or a lack of proper documentation to prove that the debt exists. But how are we supposed to record our uncollectible receivables? Well, there are two methods, namely the direct write-off method and the allowance method. The direct write-off method requires the company firstly to acknowledge that a debt is uncollectible, and then at that point, write off the amount of the receivable as a bad debt expense. The main advantage of the direct write-off method is its simplicity in comparison to the method we will explore soon. The main disadvantage is that it can violate the matching principle. Thus, generally accepted accounting principles prohibit this method. However, the exception to this prohibition is if the amount of the bad debt expense is immaterial to the company. The allowance method involves the establishment of a contra asset account called the allowance for doubtful debts. This account represents the amount of receivables that the company estimates to be uncollectible based on research and historical data. An accountant can take three approaches of the allowance method. Firstly, the percentage of sales approach, secondly, the percentage of receivables approach, and finally, the aging of accounts receivable approach. The percentage of sales approach involves developing an estimation of the proportion of sales in which the company expects to eventually be deemed uncollectible. The dollar amount of the proportion of sales becomes the allowance for doubtful debts. The main advantage of the percentage of sales approach is its accurate matching, as bad debt expense is primarily a function of sales for that period. The main disadvantage is that it gives less merit to the net realizable value of receivables, since this approach utilizes a proportion of sales. The percentage of receivables approach involves developing an estimation of the proportion of receivables in which the company expects to eventually be deemed uncollectible. The dollar amount of the proportion of receivables becomes the allowance for doubtful debts. The main advantage of the percentage of receivables approach is that it results in a very meaningful net realizable value, as the allowance account is determined as a proportion of receivables in comparison to the percentage of sales approach. The main disadvantage is that it does not match expenses as well as the percentage of sales approach, because the bad debt expense is more affected by prior year experiences that make up the estimate. The aging of accounts receivable approach is a refined version of the percentage of receivables approach. It involves estimating the bad debt expense from a proportion of receivables. It utilizes an aging schedule to assign higher percentages of failure to those debts that have been outstanding for longer. Accuracy is improved because old debts are less likely to be paid. The main advantage of the aging of accounts receivable approach is its higher degree of accuracy in comparison to the aforementioned approaches of the allowance method. The main disadvantage is its greater level of complexity in comparison to the other approaches.